is Justin Pulitzer. This is my midweek video for Wednesday, March 13th, 2024. CPI day. It was hot again. The last reading had been hot. We saw the last PPI hot. Then the PCE was better than expected. I should say in line. It wasn't better than expected, but it was in line. Then we had the jobs number, which was a little better than expected, but huge revisions to the prior number. I'm expecting the same thing with the current number. And today's CPI, again, like I said, was a little hot. And then we have PPI again this week on Thursday. We'll see if that's hot as well. It probably will be. As far as sentiment goes, we're at 38% bulls coming in to the week. I think a lot of that was because of the dump on Friday, a little recency bias. Never feels good to see reversals, particularly in big stocks. But like I told you, liquidation break was likely, but markets don't tend to put in tops or bottoms on Fridays. And we saw new highs in NVDA before the reversal, but it's rare for that to stand. I wouldn't say it's as applicable per stock as it is for the markets, but when you have a stock like that, that's the real general and driving force of the entire market, I would say you can generalize that over. So I think the quick drop in sentiment probably pushed the bears out a little bit further. As far as the CNN gauge goes, they're still in the greedy camp. They're not into extreme greed, which I guess is a little comforting. A week ago, we were at 73. The prior read was 64. So we did see a little bit of a bounce here. And that would be expected. I think a little bit of a sigh of relief given the market didn't continue really tanking early this week. It was set up for that potential. So with regard to CPI, the month over month was in line, a little bit hot in the yearly, and a little less than the prior reading. So I think that was a little bit of a buffer with regard to the bears not really being able to sink their teeth in. But the Fed has told us that they don't expect inflation to come down in a straight line. And remember, the Fed isn't going to necessarily be cutting rates because they've conquered inflation. That's clearly not the case. It's because the Fed is accommodating the Treasury, who can't fund itself. They're having a very hard time getting anything off that's past 3, 6 months, and maybe even a year or two. And they usually like to finance with 10-year and longer Treasury arms, but they're unable to do those auctions. They did a 10-year today, and it was really not that good. I think Santelli said it was a C+, but it would have been a D- if it was a primary auction. So keep an eye on that. With regard to the Fed, people still see the June as being the most likely, and it's still well over 50%, 57%, even in the face of the kind of crappy CPI data. If you look out to the 1 year, and I've been harping on this more recently, it's still over or around 5% at any given point in time. It sort of looks like it almost wants to break out. And I think if we get another hot PPI number and maybe that starts spilling into PCE, we could start seeing Fed rate cuts come off the table. As of now, within a year, we're only expecting 1 to 2 rate cuts total. So if anything jeopardizes that, I think it could cause some turbulence in the market. But as of now, they seem to be looking past it. As far as VIX goes, we were able to get over the 200 MA, but it really didn't stick very long, a day. And we came right back down. I had said we needed to hold at least the 200 MA, currently 1477. Anything below there, I said risk to move back down, probably to fill in this gap here from 3.4 to 1349, and that would line up with the channel low. So what now? I would think any pops in volatility, again, do need to clear at least and stay above the 200 MA at 1477 and change. We do have the end of month, end of quarter OPEX this Friday, so maybe there's a little bit of re-upping once we get past that, or maybe if PPI is able to get the Fed rate cut probability down below 50%. But I think as long as it's hovering above there, it's sort of still game on. As far as the TLT goes, still consolidating below the downtrend. We're right on the key support here. I think if we start losing the 200 MA, we could see a move down to at least the 20 MA at 93.96, and likely a retest of the 93.61 down to 93.10. and then we'd kind of see. But for me to remain long or to initiate and be long, I'd really rather see it over the downtrend, and at the very least here, it has to hold the 200 MA. I think below the 200 MA is susceptible to liquidation breaks. Anything above could chop sideways, maybe go higher. I was looking at TNX, and I think this could be the fly in the ointment if this continues to rally. We saw a move off the channel low and primary trend. I re-rendered this a little bit, so we now have a primary channel and then an interim channel. If we bounce just back up to the interim channel, the 20 MA up to the 100 MA are the likely key resistance. So that would be anywhere between 42.26 to 42.64. I think up there we could see a reversal in the markets, and we'd probably see a move back up. If this does continue rallying, we might see a move down in the market. So keep that in mind. It's benign at the moment, but if the 10-year does start creeping up, I'd feel a little bit less confident with new money longs. And I was looking really at the 10-year as well before starting this video, and I've told you before I'd feel much better with this if it was back below 4.10% and really below 4%. I think that would really cement the idea of Fed rate cuts. But, we've scaled back the expectations for rate cuts this year. Remember, we came in, it was going to be 6 or 7, and now it's down to maybe 1 or 2. With regard to KRE, the 100 MA has been the key MA that's currently residing around 47.52. So somewhere between the 20 MA, 48.36, and 47.52 is the must hold. For me to want to be long this, I'd need to see it over the 50 MA at 48.83. So 48.83 plus, I think, gets a move back up to 51.44, maybe a little higher to retest the primary downtrend at 51.85, depending on what day it happens. But again, need to see it over the 50 MA for still higher prices to stay healthy. It needs to hold somewhere between the 20 and the 100 MA, the 100 MA seemingly being the more important one of late. Dixie, this was starting to become problematic for the bulls. It has since rolled over into a downtrend, but we do have a look below and fail now. Anything above 102.77 does risk still higher prices. If we just went to the downtrend line and we got back to, let's say, the 100 MA, 103.775 and falling, that area should be resistance now. We had seen the 200 MA acting as support previously. It's currently 103.71, so pop up to there is likely shortable, at least right or right out. You don't want to really see the dollar start rallying, though. If that and rates start going, and maybe with a combination of oil, we could see some kind of an unexpected move lower in markets and a rotation. I think a benign dollar and risk-on sentiment has really been running the show lately, and I had told you not to get too bearish just yet. We're still seeing Bitcoin act well. I have an alert below the Monday low at 69,124.99. I think if we were to see a move back below there, we could have a confirmed secure high. I don't know that the 10 MA would hold because we're kind of right there at 67,877. I would think we would go down to at least the old reference high at 65,520 and probably a move down to the 20 MA somewhere around 60,778. Generally speaking, though, anything over this little zone here of 69,355 up to 70,195, I still think the risk is sideways to higher. Below there, I do think it's probably prudent to stop out and maybe even try short. Mara, this has not been acting so well. We've seen stocks like MicroStrategies and Coinbase do well, but Mara has been a little bit of a laggard. We had a look above and fail at the prior range high of 31.30. We got the 61.8 retracement here at 32.10. I had said I thought that area was an opportunity to book gains. So what now? We're down into some key support here on channel low and a reference support zone from 18.14 up to 19.23, 19.88, that's little area. You have a bottoming tail hammer today. What I'd ideally like to see would be a higher low or really anything over the Tuesday high at 20.95. I think could see a bounce likely to the 20 MA at 25.26. If we do keep going lower, the retracement could take you down to 16.14, which would be a triangle fill, and that area could act as an opportunity for a bounce. But it held the channel low here, so it is doing what it's supposed to do, quote unquote. As far as MicroStrategies go, they're playing with leverage. They get it cheap. As long as Bitcoin is acting well, I would imagine MicroStrategies do as well. We do have dueling banjos here with hammers. If I were long, I'm not currently. I would use today's low of day of 1438 as a stop. I mean, you technically could pull all the way back to 1315, which was the old prior high from 2021. And that, to me, would be a opportunity for maybe a buy the dip if it lined up with the 10 MA at 1249.96, at least for a scalp. But I would probably be more interested at this point, given the run it's had at a 20 MA pullback around 990.99. But yeah, as long as it's over 1315, it's sideways to higher. Gold, acting a little well lately. I think it's played a little catch up. And I think the problem for it is it just ran a lot, very quickly. And we got up to the 2 times range here at 202.58. We are on the top side of the old channel. If it just were to check back to the breakout, I would view that between 193.18 to 194.45. That would probably be the quote-unquote buy the dip if it lined up with the 20 MA. But probably a good idea to trim some profits here. Upside, we could see 208.40, which would be the 2.618 of the prior range. Often you get the 2 times range, a pullback, and then an extension, and sometimes you even get a check back to the breakout here, and that wouldn't be so abnormal, but we are still above the 10 and the 20 MA, so still okay, but I do like trimming a little bit here into strength given the run that it has had. As far as oil goes, it's tried to run and it's been really, really choppy. I'm cool. I don't think downside is in play as long as it's over 77.59, but I think below there could see a liquidation break, probably somewhere to the 50 MA, 75.79 and rising. We know this 76.18 to 77.59 zone has been key, and we are above there. I'd feel much better to the long side if it could get over the 79.29 level and hold. And then I think we could make our move back up to 81.37 to 82.64, but it just looks like it's content here consolidating. Maybe we need some news to break it up and out or down and out. XLE has seen a little bit of rotation into those names. I guess oil hanging out high, and also some of the tech names seeing some selling has inspired people to buy maybe some banks and usually oil. 90.26 is the 1020 gap fill. If we do complete the inverted head and shoulders, the 2 times range is at 91.34. We know 92.56 to 93.69 is some potential resistance, and then the 2.618 is up around 95.16. I have some sell orders for basically the gap fill and channel high 2 times range zone. So yeah, I'm not getting too greedy with that. I think you have a dubstep setup, so if you have a break below 88.47, it could be a good stop. But anything, and if we did see that, we'd probably pull back to 87.11 for a quote-unquote right or right out by the dip. I think the 1020 MA now 87.32 and 86.35 respectively are by the dips. But shorter term, there could be a little bit of a quick trading short down there. But anything that we're able to clear the high of day here at 89.32, I think just goes straight up to 90.26 and 91.34. But, XLE has not made it easy for longs lately. It's definitely been a chop fest. XBI. We got the channel high. It does not surprise me to see a pullback here. I mean, even just a check back to the 94.32 breakout, which was the 1.9 high, would make sense. I'd be interested in the 50 MA, though, because it lines up a channel low at 92.35 and rising. I don't know if it will necessarily get it for sure. Stocks have often eluded key technicals on both the up and down side. Maybe we were content holding here right at the 20 MA, but if you want to try that, maybe smaller size, I'd feel better with the 50 MA personally. I tend to be a little bit of a perfectionist when it comes to levels. As far as Lilly goes, this has been one of the big key movers to the upside. higher low today. I think if you're long, you use 738.01 as a stop. I would imagine a check back to the 1020 MA area is probably a good opportunity to trim some gains if you haven't already. 764.62 up to 767.47, and the underside of the old up channel would be 776.55. I think we're just in a consolidation zone. This sort of looks a lot like Meta and Amazon, and we could just be in a big chop zone for a while. If we actually did have some decent IV, I'd probably be into selling iron condors or strangles. If we do get a larger pullback, the top side of the magenta channel, if it were to do it tomorrow, would be 711.20. I'd love it better if it lined up with the 50 MA. I usually look for a confluence of technicals, currently 695.37 and rising. So if you get that top of the channel and 50 MA, I think that could present an opportunity. Novo Nordisk, they're another one of the obesity drugs that have been super strong, held the magenta channel beautifully today. I would say you could probably raise your stop now if long. I wouldn't let it get below 133.52, basically the prior day's high. Could we keep on going up to the 149.55, 2.618? It wouldn't surprise me. These stocks have done very well. We saw this Viking Therapeutics pop, and I had said I didn't think it would just give it all back. It has pulled back decently, and maybe the 20 MA here winds up being some support around 60. If you've got the Huevos Rancheros, you could sell 38 or below puts a little longer dated. That would just take you back to the gap fill. They have some obesity drugs, but I would do it smaller size. This one is a little less proven, obviously, than the prior two, Novo and Lilly. Pfizer, nice little trade here. Breaking out of trend, holding the 50 MA on the pullback, and we have a nice little dubstep setup. So if you want to be long, do it over the 2-day high. You could either use 28.39 or 28.34. Quick stop, obviously, below 27.76. I'm going to pull up SPY, but we're going to talk about ES and NQ first. You guys know the drill by now. So a few people ask me why I stay on the old contract and don't just flip to the new. I think the answer is pretty simple. I have most of my chart work done on the older contracts, and the new contracts are sort of like a new wine, a new bottle of wine. You want to let it breathe a little bit. And I find if I don't flip over right away, the new contract gets a little bit of character to it, and the technical levels take on a little bit more importance. So that being said, with regard to the H contract, I had said anything over 51.23.5 I thought was good to the upside. We're almost back to the reference highs in the 2 times range at 51.87. If we do get to channel high, we could be up around 52.11, and the 2.618 is up at 52.26 quarter. As far as where I would raise my stop to now, that's sort of subjective, but I would feel comfortable using 51.70 quarter. If we lose that, there's a very good chance that we repair the rich close to 51.55. With regard to the Qs, this has been lagging a little bit. We've seen some of the big momentum names in AI, semis, and cybersecurity lagging a little, but they did pick up today. And anything over this 18,144.75, I think, is again good to the upside, probably up to 18,377.75, maybe even the 2 times range at 18,463.5. Now, because the Qs are lagging, this could be a good opportunity to sell. If it does really just pick up its swagger, we could get back to the 18,660.5, but I think the 2 times range and channel high zone here would probably be a good area to sell into. With regard to SPY, we held the 10 MA, we held the magenta channel low. We are back over some key levels. We're at the 2 times range. I think anything over 516.40 could put the magenta channel high in play. Currently, if it were to do it tomorrow, I guess it would be 524.87, maybe up to 525s. We have a couple of different fib extensions on different time frames. You have 538.23 and 545.89. I don't know that I need to assume end ranges because we never do that. But I think anything over 514.20 is okay. I think if we lose that, it's possible we get down to 510 and maybe even all the way back down to 506.37-ish, the 20 MA. maybe 505. I think that as long as we're above the 10 MA, you could remain long. Generally, below 10 MA, I do think 20 MA is in play, but the fact that we've been holding 10 MAs on pullbacks and not even testing the 20 MAs shows you there's still buyers in the market. The expected move into the Friday OPEX, and of course we know this is both the monthly and the quarterly, it's 5.68. The max pain pin is down at 490, but I think that that has a lot to do with open interest from a while back, and I don't necessarily know that it's relevant. I did look into the contracts, and I noticed 510 and 505 both have a lot of high volume nodes. It's really every 5s or 10s in the SPY, so that makes sense. So I do think that if we do start slipping, that could become magnets, but I think it would also wind up being put walls down there, meaning support. As far as the DIA goes, expected move is $3.60. I think anything over 389.29 is bullish. Below there, I'd probably get a little bit more concerned. We are up on the green channel high, and we are over a mini downtrend. So yeah, if you want to use a bit of a higher stop, which I'm totally cool with, I think you could use basically just say 390. If you want to use 390.19, 389.47, again, that's sort of dealer's choice, but anything over there I do think probably gets back to the 392.84. I mean, I don't know that we're going to go to yellow channel high, but if we were, we'd be up close to 400. So if you want to do some kind of a call spread, $10 wide, maybe longer dated, that makes some sense to me. 20 MA has been the key support here, so anything below 388.28 I think is just an outright short. We've seen a couple of stocks in the Dow acting very poorly. Boeing had it's been under pressure for a while. Let's just face it. They've had a lot of substandard planes, and we've had problems that have just been, I mean, it's just been years now. I mean, I can't remember the last time we didn't have problems with Boeing. And they had a whistleblower who apparently was alleging 1 in 4 of the oxygen masks installed were faulty and would not work during emergencies. They had workers being told deliberately to fit substandard parts, such as ones in scrap bins, to aircraft in order to hurry up production, and then general safety measures being ignored by under pressure workers. I mean, this is just a disaster. So this whistleblower apparently shot himself, but it sounds very shady. And I think Boeing management at this point just needs an overhaul. I think they need to clean out the CEO. I actually think they need to clean out the board also. But if we were to come down to the green channel low, I mean, that's roughly around 159. It could overshoot. I wouldn't be surprised to see this thing do the fib extensions down to 131.46, maybe even back down to 89.41 if they have a real botched kitchen sinked quarter. Anything below, let's just call it 199.5. I think is risky to the downside. If we bounce up to there, it might even be a short opportunity. This was a big floor of support for a while, and what was support likely becomes resistance now. So that 199-200 area could be issues. Now, 3M has been plagued, I guess, for a while. They got rid of their CEO, but here's my question. How do you think their quarter is going to be? I mean, it can't be that good if they're getting rid of the CEO, and I do worry that they're going to kitchen sink the next quarter. I do think if the stock gets smashed on that kitchen sinking, it's probably a buy the dip opportunity. But right now, would I buy this initial pop? I don't know. I can tell you this, though. Just use the, let's call it the 98 level, 98.19, the 38.2. We hit the 50% fib at 100.57, so we need to hold the 38.2 on the pullback. If we can clear the 50% fib, we could see 102.95, and who knows, maybe even fill in the earnings gap at 108.02, but I think that would be a short opportunity. I'm going to give this a few days to see if it can settle in. If we do clear this high of day, I do think there's a short-term trade, but I do worry about the quarter. It's just on 424. I have a feeling it's going to be not so hot. With regard to IWM, the expected move is $3.08. I've told you that this zone here, like these 208s, 209s, is resistance. We hit it. It was where we really broke down from. And obviously we pulled back here. I think the 20 MA plus keeps it quote unquote okay. but I would feel much better over the 1227.23 high at 205.49. Anything over there in between this zone, I think, is sort of sideways to higher. Below there, risks lower, and we're kind of back below the green channel. I'm just curious if we were to do a little re-render here, and let's say, just for argument's sake, and I'm comfortable drawing it this way as is, but if we were to redraw it this way, look where that zone is up here. It's right into that area. So I think we could ride the channel, but to me, we hit up some resistance, and it may need a little time to kind of digest where things are. As far as the Qs go, the expected move is $6.42. Now, I'll be very curious to see, with NVIDIA and co. kind of capturing the spotlight and strength, will Apple and Google continue to move? Check out where the Qs held. I mean, the more times you bang on this, the more trouble it will eventually be. But as long as the 20 MAs hold on dips, I think it's still viable. I think if I were long, I would just use 440.43, basically the 10 MA as a stop now. We should, quote unquote, now get back up to the reference highs. I would think we'd at least get back to this 3.1 high at 446.58. I have an alert here around 446.73. That would be my zone to start selling a little into. If we do just go full on here, like let's say Apple and Google recover and NVIDIA and all of them just keep going, 456.74 would be the magenta channel high. So if you want to do some kind of call spread, that makes sense. Just don't let it get below the 10 MA on you. And if it were to lose the 20 MA and this fulcrum pivot of 433.65, I think we come down to 425.61 and fill in the 221 gap and get the 50 MA. Look, eventually we are going to get a real pullback. It's not a matter of when, it's just if. And I still like using up opens and trimming and trailing into strength. Okay. As far as SMH goes, 10 MA held. We didn't even get the 20 MA at 212.95, which I had written as a row, right or right out long. It's the top side of the green channel. And the 50 MA would be the next real row at 195.31 and rising. So very simple. Just don't let it get below the 10 MA at 221.91. And if we were to lose low of day at 220.56, it's probably a short, but as long as it's above there, sideways to higher. NVIDIA. So, could we get more than just 2 days down and holding the 10 MA? We're over the 2.618. So 881.42 is a good stop now. Will we resume up and get the full Monty up to 1,000? It seems likely, probable. We were up a little in the after hours as well. So yeah, just keep trailing up stops. If you want to use VWAP, I'd even be fine just using 900. You know, don't let it get below 900 on you. How does that sound? So one of the reasons I was a little skeptical that the AI and semis trade was just going to be over is because SMCI is getting added to the S&P 500 on the 18th. So that gives us a few more days of, you know, the circus. Anything over 1,077.87, I think, risks a move to the green channel high. If it were to do it tomorrow, it'd be a little over 1,300, 1,304. I would probably use the opportunity to 1210s to trim. And if we do get the channel high, I'd still use that as the opportunity to trim. We're still holding 10 MAs. We're still over the 216 high, and anything above there is okay. Below there probably is a good opportunity to stop out. ASML. I was a little disappointed we didn't get a larger pullback to the top side of the green channel and a retest of the 914.21 old high at 895.93 to like 900. But now I think it's very clear the 20 MA is the key. Anything over 956, I think, is sideways to higher. Anything below there is, I think, a short, probably down to that area, and maybe even an overshoot to the 50 MA, wherever it is at the time at 865.33 and rising at the moment. If we did get the 2.618, that's 1108.04. If we just got the megaphone high again, that would be 1,088. But just let's keep it simple. Anything over 20 MA, sideways to higher, below, I think, is a short. Adobe. So they got wackarooed on that OpenAI with the Sora announcement, and it made a higher low, which is good, and we are over some key levels here. We got back to the prior breakdown of the 563.34 to 569.98. So very simple. Just don't let it get below 569.98 or 570, whatever you want to use. That's the 38.2. Anything over there, I think, could see 583.13 and probably the 50 MA at 586.72 and falling. I would use that 50% fib and 50 MA probably to book some profits here. So yeah, 570 plus okay, below short. How are their earnings going to be? I can't tell you, but I can tell you the levels here. I'm a little iffy after we've seen a big drop, although it was really just on the fear of OpenAI, not necessarily the reality. So I don't think their quarter is really that affected, but I'm giving it a little bit of a break. I was going to kind of wait and hope it would come down lower into the numbers, and then I thought it was a bounce play, but the fact that we're rallying into it makes the trade a little less certain to me. As far as Microsoft goes, looking good. We were still positive on this. I thought it was just a consolidation. Anything over the 10 and 20 MA was a long, and now we're back into that 415.32 reference range high. Probably a good trim spot. If we got back up to 420, you probably want to trim some more. But the real question is, are we going to go up to the channel high and test the 440 and maybe even make a run at 5 hundos? Can't tell you, but I do know 415 to 420 has been the sell zone, and traders do what works until it doesn't. Good area to book some profits into. Oracle. So we've seen these moves before where they've had these kind of spectacular gap up on earnings. They've had a couple of days of follow-on, followed by pullback and chop. And then the last one, they had this... well, I mean, the last couple of numbers, they've had some down moves, which have led to still lower. So my guess is Oracle is probably sideways to higher for a little bit. We've seen them before, though, where I'm trying to figure out on the chart, they've gapped up here before. This was back in 2021, and then it just sunk and kept on selling off. So I don't just assume it's going to be a move to the upside, but I can tell you this. We know that 127.42 is a key reference level, and we know we have a low of day now from the earnings day. So anything below 124.60 is a stop out in short. I'd probably use either the close. I'd probably just use the close, or maybe 127.42. So 127.54 to 127.42 is a stop. Anything over there and over 129.37 could keep on rallying. I'd probably I mean, it's in clear air, so it's just a matter of where it goes, not a matter of, if at that point. But I would just be a little bit careful given, the way things have traded recently and the way this stock has been known to trade. I mean, I don't necessarily know that it's going to follow the historic pattern. I mean, we can't just assume that, but I can say that, I like using the earnings day range. And I like using discipline, and we're adding in the fibs here to see where we could go on the upside if we do continue. 154.96, 171.98. I mean, this isn't ASML and SMCI, so don't just assume it's going to be, a straight up line. And we are into some resistance, so I do like trimming given Oracle's past. As far as Apple goes, this has been trying to rally. It's been very weak. I sort of like to ask, what is the stock trying to do? How good of a job is it doing? It seems like it's trying to rally. It is rallying a little, but it's not doing a great job. I think that this zone up here, 178.64 to let's say 180.17 is probably going to be some resistance. Actually, I'm audible, 179.25 up to 180.17. I think that zone will be some resistance in the 20 MA. So yeah, it just doesn't look like it's got the mojo going right now. All this stuff that's exposed to China looks like it's got trouble. Tesla as well. So Google is up into where we thought it would get to, basically the 38.2 and the downtrend. If it clears the 38.2, I suppose we see the 50% fib at 142.22, but I would be trimming here, and I think you could probably use either the 100 MA at 137.76 or low of day at 137.03 as a stop. That could get dicey and be a short if it does fail there. As far as Tesla goes, just also not really rallying. It's just riding channel low. I mean, what is it trying to do? It's trying to bounce. Is it actually bouncing? Not really, and obviously it's not doing a good job of bouncing. So 194 to 200 would be resistance on the upside. If we do break here, we could see a move down to 152.37 to 144.43. So you just be a little careful if you're long there. I'd probably just be in call spreads if anything, and if you want to put on a put spread as a hedge against longs or just outright short, I'm fine with that as well. Amazon, I've been bullish. I'm always most comfortable when it's over 175.39. I actually used today's bounce to roll down my upper strike from 190 to 185. If it were to rally and get channel high, I mean, that's basically just back to the highs at 188. So I have a long play on. I told you guys about this in a prior video. Basically, I just want to pull it up now to be 100% accurate. So I'm long the July 175-185 call spread, and I'm short the 160-150 put spread. So basically it's a play for Prime Day and thinking that this could rally given some of the strength we've seen in things like Costco. Anyway, Meta. So they got nailed on President Trump saying he was not into banning TikTok because, he hates Mark Zuckerberg. He did all those drop boxes and funded ballot curing for Democratic Party. Zuck basically was blamed for the 2016 election going to Trump and not Hillary Clinton, and I think he wanted to make up for that, and he got himself involved in politics, and I think Facebook is going to pay a dear price if Trump is reelected. I do think that there's going to be more regulation on social media, but just keep it simple. Anything over 485.96 and the 20 MA at 486.60 is still bullish. Below there, probably stop out. I mean, it is possible we get a move back down to 453.01. Technically, we stalled at the 2 times range. A retest of the breakout made sense. So if you just took out the President Trump news and you just showed me this chart, I'd just say it was a pullback to the breakout. And we could now make a run to 539.29 if the market is benign. Okay, Netflix. As far as and by the way, Facebook has a lot, and Google have lots of lobbies in Washington. I mean, Chuck Schumer's daughter works for Facebook, for crying out loud. All right, as far as Netflix goes, I'm moving up the must-hold zone. We had been a little lower at 568.08 to 585.80, so we're now going to say 585.80 to 596.15, and I'm just going to say the 20 MA, 593.86. Anything over there, I think, could rally. Could we get back up to the old 700? Possible. But it just looks like it's consolidating, so sideways to higher for the moment. Booking. Yeah, booking.yeah, right? That's the commercial. Often what happens is when you break down, you check back. The check back has been a little weak, so 10 MA to me is your stop at 47.7501. Target zone, I had it at the 20 MA, so I guess it's still the 20 MA at 350... 35, 76, 56. Look, they got to split this stock. I remember when the stock was in the 500s. This could get back up to the underside of the old channel in the downtrend. I would think that would be 36, 41, 73-ish. So yeah, move up there I think would be an opportunity to book profits if you took the bounce or to try short. BABA, man, this has been a choppy SOB. I'm actually long a little BABA. I haven't touched it. I've just sort of been sitting in the trade. I'm long the 8 in January, by the way, 80-90 call spread, and I'm short the 70-60 put spread. Double tap, inverted head and shoulders. Look, it's got to get over and stay over the 100 MA in the downtrend. I mean, if it does what it should do, it should get to $90, which is the 2 times range, and maybe even up to 97.21, which is the 2.618. If this, my guess is this will probably just come down given its recent price activity, but I still, I like it long. I don't know what to tell you. BIDU. Falling wedge. I don't really know what to make of the chart. I mean, it's not a pretty chart. We did hold the couple of 2 times range targets on the downside. 98.74 was my downside target. This was an old upside target, but prior support. The 100 MA has been some resistance, so it may be again at 109.67. But if we do make a move up to the real true wedge downtrend, it's in the 118s. So maybe there is some move, but we've sort of have this down wedge and then the down wedge within the down wedge, and we're right up on the down wedge. for lack of a better word. So if you did buy the dip lower, probably a good area to trim into. I'd definitely use low of day as a stop now, 102.60, and I'd trim if we got up to the 100 MA for sure. So yeah, it's a down wedge, and it eventually should break to the upside. It seems like sentiment in China is improving. I'm just going to tell you this right now, though. If you own a China stock, do not own shares. Own calls, or really call spreads, because if they invade Taiwan, these stocks are going to go down 25-30%, and then they may not reopen, or they're going to be similar to the Russia situation. They'll be banned on U.S. exchanges, and you'll have all kinds of problems. So yeah, just be careful. And once we get through typhoon season, I mean, who knows? My guess is they're not going to move on Taiwan this year. I think China really probably prefers Biden in office over Trump. Trump, is much tougher with tariffs. So maybe they're going to give him a little bit of a break, but I also think that they might want to move during the Biden administration, because I think he would probably not be as tough in his reaction as Trump would be. So it's sort of a push me, pull you situation. But yeah, long story short, I think China's stocks probably could bounce, but call spreads and definitely defined risk. We'll leave it at that. Cheers.